Afternoon, everyone, and welcome to today's panel discussion on Paris alignment of the financial sector at COP26. My name is Francis Malige. I am the Managing Director for Financial Institutions at the European Bank for Reconstruction and Development. I'm very pleased to have an esteemed panel of speakers with me today, with whom we will discuss the structural transformation of the financial sector that will need to take place to align banks' business models and portfolios with the aims of the Paris Agreement. There is growing momentum in the financial sector globally, recognizing the need to scale up efforts on climate. Climate change is indeed becoming an essential part of good corporate governance in the financial sector. And this is very much recognized by the COP26 presidency, which recognized that unharmonized practices from accounting for greenhouse gas emissions to reporting present a challenge in implementation. There is no one gold standard which defines the alignment to the Paris Agreement, but there certainly are initiatives that contribute to shifting the market. And for example, there is a clear push around disclosure of climate-related financial information. One particular framework which emerges as the leading framework is the Task Force for Climate-Related Financial Disclosures, so-called TCFD. This is now being used by over 2,000 institutions across 90 countries. It's focused on public disclosure, but also on underlying business practices linked to governance, strategy, risk management, and how to set your targets and what metrics to measure. So it's not just about risk, it's also about opportunity. On the other side, on the regulatory side, which is an essential side of the banking business, the network for greening the financial sector is also emerging as a leading framework. It's a club of regulators and central banks sharing experience and building knowledge. And here, of course, the work of the EU is very influential, as it's a region that is very much in the lead on that front. But when we look at the EBRD region, emerging markets, is there enough being done and fast enough? And is the financial sector ready to go on the Paris alignment journey? Are financial institutions able to assess and manage climate risks? This is exactly the questions we're asking ourselves when designing our Climate Pulse survey, which we did earlier this year. We launched the survey to help us to inform the structuring of our new strategy for the financial sector. As many of you may know, the EBRD has committed to align its operations with the objective of the Paris Agreement. And to do that, understanding the current status of the financial institutions in our region was essential. We were looking for answers to the following. Are financial institutions aware of the impact of climate change, and how are they implementing their transition plans? What are the key barriers and motivators that speed up or hinder the process? And actually, what does the financial sector expect from IFIs such as the EBRD on their Paris alignment journey? We received answers from more than 130 financial institutions across 34 economies, and these answers have shown that, first, nearly 60% of respondents do not see climate change impact of their portfolio as a source of potential risk. The remaining nearly 40% manage these risks almost entirely through rather simple exclusion mechanisms. So the integration of climate risk with the risk management practices in the banks is not there yet. It's the same with physical climate risks. We see surprisingly low uptake of physical climate risk management, even in countries with high water stress or issues of land erosion and others such issues. And further, the survey also has shown that nearly 2/3 of the respondents do not involve their risk management departments in leading or co-leading the implementation of climate risk management. So in other words, nobody's ready. So what do we do about this? Well, the FIs have also identified the regulatory environment as the most important driver in their decision to adopt climate-related practices. Interestingly, This does not have to enter regulation or supervisory expectation. Even the participation of the regulator in the NGFS is associated with higher awareness and more planning of banks, even before the regulator actually issues the regulation. But there is still a need for the regulators to provide regulatory signals. So, in fact, if you look a little bit more in detail, and at slide 2 on the EBRD's countries of operations, we see that all of the countries have ratified the Paris Agreement, but about 60% of the regulators have joined NGFS. It's a bit more than half, right? You can see from the slide, and also you see from the slide on the left-hand side here that some of the clients in those regions are part of the either supervised by the ECB or part of groups that are ECB supervised, and so that gives them a little bit of a leg up. But a lot, and these are the dark blue ones, are not supervised, so they're left to doing it on their own. So this is, of course, very important to see how the banks are going to build their climate ambition. Now, against this backdrop, we've actually assembled a stellar panel, I must say, today, with 3 top leaders from emerging markets banking. I think their resumes speak for themselves, but I'm going to let them introduce themselves briefly. We have on the panel, I'm very pleased to welcome Ece Boru, who's the CEO of TSKB, a development bank in Turkey, which is a long-standing EBRD partner. Lucina Stanczak-Buszyńska, who's the chair of the supervisory board in BNP Paribas Bank Polska, and until recently a long-standing EBRD colleague who has found a very nice way to further her career. And Vartang Busquetidze, who is the CEO of Bank of Georgia. I'm sorry, Vartang, I'm struggling with your name, so I'll always call you Vartang. And TBC Bank Georgia, sorry, not Bank of Georgia, TBC Bank, which is the largest bank in Georgia, London listed, and has been on quite a journey to become an emerging regional champion in banking in the region. So I'd like to ask you to introduce yourselves briefly, and then to start with, as we've seen, to start with commenting maybe on this question, as we've seen that there's no universal definition of Paris alignment in any of our markets, and the market seems to be struggling a bit. What does it mean for you and your institution, and where do you think you are on the journey? AJ, do you want to take a start?
Thank you very much, and I'm very pleased to participate, and I want to say hello to everyone. And following the commitments made at COP21, Paris Agreement climate change related impacts has become the main agenda of many supranational organizations, central banks, international financial institutions, besides development finance institutions. It is now well recognized that financial risk arising from climate change may severely and adversely affect financial stability. Our bank TSKB, adopting sustainability and inclusion as its core business model for Turkey's qualified development, recognize the physical and transition risk arising from climate change and the steps to be taken to manage risk as well as arising opportunities. Taking a constantly active role in the combat against climate change and contributing to Turkey's industrial transition to a low carbon economy are among TSKB's priorities as part of our sustainable banking strategy, with the contribution of mainly development finance institution stakeholders. We have financed 16% of Turkey's renewable energy capacity. By way of the direct loans as well as SDG-linked transactions, TSKB promotes and leverages sustainable development in Turkey. Sustainability, everybody knows that, is a journey involving various components and stakeholders. Yet starting from the Paris Agreement, it is deliberate that the awareness in the community have been accelerating. This is also noticeable in our activities. We have initiated the carbon neutral banking practices in 2008, 13 years ago, and published the first CDB climate change report in 2013. We became a signatory to the IDFC climate declaration in 2015, further to the Paris alignment, which was followed by TSKB statement on climate change in 2016, stating our strategy and goals regarding climate change. We became a signatory to UNEP FI principles for responsible banking in 2019 and started our disclosures during the Finance in Common Summit in 2020. We became signatory to Sustainable and Resilient Global Recovery and Biodiversity Declaration, among others. We set out the scope and principles of the strategy to combat climate change by our climate change mitigation and adaptation policy published in this year. We transparently disclose our objectives and impacts within the scope of mitigation and adapting to climate change in our integrated annual report and the UNEP FI principle for responsible banking progress report. And we issued the first climate risk report in line with TCFD recommendations in Turkey. That said, EBRD's introduction of our bank to the TCFD phase 2 of UNEP FI through its technical assistance supported by Clean Technology Fund is highly appreciated to our ends. This has accelerated our planned journey towards climate risk management. We continue to participate in the third phase of the program. We believe that alignment of our banking activities with Paris Agreement and the SDGs makes a contribution to green economy transition of Turkey, hence also in line with the bank's mission. It's our direction.
Thank you, Ece. And can you maybe comment just very briefly on what does it change for you that now Turkey has signed on to the Paris Agreement? Does it accelerate things?
Yes, of course, accelerating. And in Turkey, there's a lots of private firms and public firms has been working on the Paris Agreement. And last month, we can say last month, Paris Agreement signed by the
was
government.
Ratified. Yeah, exactly.
Yes, ratified, and I think it is still be going accelerating.
So good news.
Yes,
Lucina,
yeah.
how does this play out for you? What does Paris alignment mean for BNP Paribas?
Yes. So first of all, thank you very much for inviting me to this very interesting panel. I'm very pleased to be here. And I maybe start with a little reference to what, Francis, you have said in your presentation. BNP Paribas in Poland is, first of all, belongs to a EU member state country. It's a part of large European group, on the other hand, and obviously has to follow quite a detailed regulatory regime when it comes to climate change, ESG, both on the disclosure side and on the risk management side. First of all, what we have, and I have to refer to it, Poland, being a part of the EU, needs to follow the EU Green Deal agenda, and especially the recent legislative package, which is fit for 55%, which is quite a challenge in a country that very recently was still 90% based on coal energy generation. So the challenges are there, and we as a large client on the market would like to support the economy in this journey. And this is actually how I would see this Paris alignment, is to support the economy in moving away from carbon heavy businesses into light CO2 free through the financing, advisory services, which is also important, green savings, and capacity buildings. And there is far more than just lending associated to it, I would say. But what is very specific for the banks in the country, and it's our journey as well, is that there is a number of regulatory disclosure requirements coming, first of all, from non-financial disclosure directive, and that is going now to convert into CSRD. And I would say EU taxonomy, which is a huge journey, I guess, not only in countries like Poland or Central Europe, but across the board, since these are very new requirements and very new sets of rules that are actually changing or appearing as we speak. Therefore, to adopt to these requirements and put them in place, and some of the deadlines are as early as end of this year, maybe nearly sometimes impossible to do it right. So you have a balance whether you want to do it right or what you should disclose. It's quite difficult sometimes. Having said that, though, the bank here in Poland, BNP Paribas, claims to be a leader in sustainable finance, and there is for sure a reason to say so. Through since practically last 3 years, substantial growth of financing in renewable business and in financing sustainable developments through green cities, green bonds, which is quite an important area of activity, green mortgages, and a number of programs with cooperation with EBRD, obviously, as well, but not only. EIB and World Bank is also quite active, as well as local development companies. But what is also quite important, that in that journey, the bank undertook a number of initiatives, like phasing out the whole relationship with the coal business. So BNP is not financing anymore coal-fired energy generation, which is in Poland still quite active. We made a number of commitments towards phasing out some of the heavier industries, but also the challenges with the transformation of the industry. You should have an open approach to see how you can support the client in this difficult journey, in the transition journey. So the client's relationship is quite important here. So the bank is listed on the Warsaw Stock Exchange. Therefore, there are also a number of guidelines in relation to this. And last year already, we tried to put together a TCFD-based reporting. We are not there yet. It's easier with Scope 1 or Scope 2 risk, where we talk about the bank moving away from let's say, or moving towards use only of the renewable-based electricity and no paper and electric car fleet. But what is the core is to look into the portfolio and assess what are the risks there. So based on TCFD methodology, we assess that the ESG risk is actually important and material, and it has been embedded into bank risk matrix, but also ICAP and the capital plan. So even though you may say that this is a long-term risk, especially if you talk about the agenda of 2050, but the short-term targets and short-term perspective and the milestone, especially for 2030, are quite important these days. So I will stop here.
Thank you very much, Lucina. And I'll just give the word to Vartong in a second. In the meantime, I'll come back to the coal because both Turkey and Poland are countries that are known to use a lot of coal. So I'll ask you how difficult it's been to work and to be the pioneers there when probably other banks were, accepting to finance coal. So think about your answer while Bartang is giving us his view, and we'll come back to the notion of coal financing in just a moment. Bartang, over to you.
Yes, thank you, Francis. Thank you, colleagues. It's a pleasure to be part of this panel today. And by the way, thank you, EBRD, for organizing a session on this very important topic. So TBC is a premium listed company, and we are in a unique position as a financial institution. We are a universal commercial bank in Georgia and a digital retail bank in Uzbekistan, which is our joint venture, by the way, with EBRD and IFC. And I said that we are in a unique position because we operate in developing countries, markets, but as a London listed, premium listed company, we are also need to work with the highest levels of climate change and transition requirements. In Uzbekistan, we already have a green business model because we only do a retail banking there. In terms of indirect impact, there is a limited effect on climate from our retail customers. In terms of our direct impact, here we are close to zero because we operate a digital business model. And for example, we have not ATMs, we have not cash there, and even we have not the POS terminal there. In Georgia, we are a leading universal bank and we are leading transformation in the region, especially with our focus on a sustainable banking incorporated SME businesses. So probably we'll have a time during this session to go in more details about the long-term targets, but what can I say now? Almost decades together with EBRD and with other IFI partners, we developed our long-term strategy in that area from the last 10 years. And today I can say that in SME and corporate business, which is approximately around 50% of our total book, we screened the environment and the social risks. And additionally, our sustainable portfolio today is around $200 million. And we have a North Star and very ambitious plans before the end of 2023 to double that portfolio. In terms of direct impact in Georgia, we have operational targets moving towards more sustainable practices as a company. And by the way, we recently received ISO 14001 certification in environmental management systems. And another important initiative is our new head office in Georgia, and which we designed to have a 7 times lower energy consumption and CO2 emissions in comparison to the baseline. And this year, we also developed our ESG strategy further in order to integrate issues related to climate change, sustainable development, and the financial inclusion into the daily work. And starting from this year, we also started our journey toward TCFD compliance and enhance our ESG governance structure. And finally, also, I'm proud to say that recently, as a TBC bank, we received accreditation by the Green Climate Fund, becoming the first commercial bank in the Caucasus to receive this accreditation.
So a lot of pioneering work there, Bartang. You have a lot of hydropower in Georgia, very little coal, I understand.
Yeah, it's true.
Now, Ece and Lucina, one thing I hear often from clients, also as a justification for regulatory intervention, is to say, if we're the only ones imposing the green standards on our clients, then we're going to lose out versus competition. Have you felt this in your respective countries, and how has it been an impediment to that journey of going into greening your banks?
And firstly, I want to ask your last question. As you know, Turkey is energy intensive country, as you know, and over the last 15 years, we have been heavily investing in renewables. Currently, circa 60%, 60% of its net zero targets we will be install capacity, and as a country defined, it is net zero targets we will be sending out our INDCC. Yet, coal is, as you mentioned, is a difficult difficult part in decision making. I can say that.
Do you have to say no from time to time, or do you? I mean, when did you start saying no to coal investments, and how was the process for you?
And last year we decided and declared no coal, and beginning of the coal energy manufacturing area, and maybe we can say recovery processes. We can be part of the already coal products, and that's all.
Okay. And then the clients were not upset with you.
Yes.
Lucina, how is it for you as a bank, which is, Poland is known as a coal country, employs a lot of people. Moving out of coal will have a lot of social consequences as well as economic consequences. How is it in your case?
I think it's a very complex case in Poland, and it will take time. What is, however, important to remember that Poland is also putting together a very ambitious program for the development of renewable energy, which comprises also on focus on hydrogen. Poland would like to be a leader on that front. Poland is also one of the largest countries for the electric battery supply to Europe and electric buses to Europe as well. There is a huge program going on at the moment for offshore wind farm in the Baltic Sea. Baltic Sea is having fantastic conditions for the development, but the transition period before these targets are reached is an issue. So there is also a substantial amount of funds that are available under just transition programs with the support from the EU. Both in the current perspective and hopefully in the new EU recovery plan, there will be also 1/3 of funds designated to the energy transformation in the country. So there are huge investment opportunities when we look from the photovoltaic clean air program, which is exactly to replace boilers, coal-based boilers in households, in houses and housing cooperatives. It's quite a big problem in the south of Poland, in particular in Silesia region. So there is a number of initiatives that allow us to be extremely active and finance companies who are transiting away from carbon-intensive businesses and industries, which also relates to other sectors, not only coal-based, but also in heavy industry, in steel and cement, and also agribusiness. BNP Paribas is actually one of the leading lenders in the agribusiness sector, having even up to 30% in some areas. And this is a huge role we can actually play as a promoter of the right solutions and promoter of services that is required. I would say that when it comes to large corporates, there's lots of knowledge already there because these companies either are listed themselves or would like to access international finance or have a number of obligations, including this disclosure obligation that relates to them directly. I think the bigger challenge is when you deal with a small clients or medium-sized clients that have no information themselves, that they haven't done such exercise really. And you converted this role from being a demanding bank asking for another piece of analysis into the partner bank that you help your clients to find solutions and offer advisory. And for example, just to give an example, and this is also technology related, we put together the first application that allows our agribusiness clients to calculate the CO2 emission in their farming business, and then what kind of solution you can choose based on the analysis that we are offering to our clients. So you have to be open-minded and you have to be really a partner with your clients, because at the end of the day, it's their competitive future, how they will be dealing inside their value chain. And these questions will not necessarily, if they don't come from the banks, they will come from their business partners if they would like to be a regional player or global player. So I think this relationship is changing, but there's a lot of education, and there's a lot of education inside the bank as well, because there's a constant upskilling, because you need to have this knowledge yourself, and sometimes it go very technically. So we are also building the right resources in the agribusiness team and the renewable business team, not mentioning the role of Chief Sustainable Officer that we put together actually very recently.
I think, Lucina, that's a reminder that Paris alignment is a journey and not an immediate threshold that banks need to meet, right? So you are on the way, and the examples you gave us around the agribusiness and about the households moving away from coal are just such examples that just like EBRD will play a role in the next few years, taking its clients by the hand, the ones that are perhaps less sophisticated than you are, all three of you, to help them with TCFD, help them with climate risk management. You're doing the same with your clients, and you're seeing that there's client demand as well as market demand, as well as perhaps employee demand as well, in terms of hiring talent, in showing that you're making progress on that front.
Exactly.
Is it the same for you, Vartong? What's been your experience in accompanying your clients? So not just working on site on the bank and getting all of these awards that you were mentioning, but also leading the clients, including the smaller ones, to greener investments.
Yeah, I fully agree. And you mentioned rightly that in Georgia, we have the hydropower stations at the TPC. We have around 70% in terms of local financing of hydropower stations. But now we think to diversify our portfolio on that area. And now we are thinking to look more to finance more solar and wind businesses. And another strategic initiative is offering green lending for SME and retail customers. And I think it has to be like a North Star. You see, you could not make a plans in that area from the bottom up, because if you go putting it bottom up, it's very difficult, and you put very small targets for you. It has to come very ambitious. Maybe it will be looked just unrealistic, but we have to put ourselves such a unbelievable, the very North Star targets for us. For example, for us, I have already mentioned that in 2023, I mean, in 2 years, we want to double our sustainable loan portfolio. It will not be easy, but it's come from the top down. This is the first. And second, for the net zero greenhouse gas emissions for indirect impact by 2030, we want to have the target. It's a North Star. If you ask me question, how? I don't know. I haven't answered, but I think it's very important that top down, from us, from the management, from the board, to have a target that we want to do it. And to answer your question, I believe that there is a more demand coming from all the stakeholders. I mean, from the shareholders, from the customers, from the suppliers. And you see, this will, I believe that it will create value for the institutions. And if we put very ambitious plans in that area for ourselves, I think we will get results, and it will be resulted in a medium term.
Lucina, maybe can I ask you a question? Because I mean, the two colleagues are CEOs, so they're implementing it. You're in a position of being the chair, so you're not executive. Making all of the executive decisions yourself. How does it play out in the boardroom as opposed to in the management board?
I think this is, of course, a pretty important topic that is being debated during our board session. But I would maybe say more broadly that these are the topics that have to be put on the boardroom table practically on a regular basis these days. The challenge is, and I can tell it even myself, the challenge is that sometimes the complexity or the legal nuances of either regulations or disclosure requirements or some specificities coming from all angles, including the regulator when it comes to climate stress testing that is coming at the ECB level, and it most likely cascade to other EU countries, that sometimes you also feel overwhelmed that you may not be on the top of all these changes and this sort of a number of various regulations that you should have to be on board. So we actually asked also for some additional information session that will allow to bring the board members, the supervisory board members also up to the speed, what we should be worried about, because these are the duty of the supervisory board members towards the company and the stakeholders to act in the best interest. And you should understand quite deeply what this interest means these days. So this is one area. Another area is obviously the risk committee discussions, that the ESG topic being embedded into risk strategy is discussed at every single risk committee. And the same with all the disclosure requirements, because this goes with how you would like to communicate with investors. We are a listed bank, so it's pretty important what is the communication channels. Even on more sensitive topics, but broadly where the bank is going. And I would say that at the moment, this whole climate and ESG agenda is a part of the real modern value creation, which should be also on the top of the mind of the board members. I will just say one little thing, that in my other hat, I am also chairing the Chapter 0 in Poland, which is the community of the independent supervisory board, and not only actually around the climate. And what you see, that there is lots of appetite to have a better understanding on what are the relevant changes on the market that are related to climate and may affect business. Then it is pretty important. And you need to embed the climate aspect into your strategy. Otherwise, it will not work. It's any other risk factor as all other aspects of your business activity. So these are really regular discussions, and it's not one session from time to time, but it's part of the everyday or every time meetings that we are having.
May I add something, Francis, on that subject?
Oh, yes, of course.
You see, I fully agree, and what I want to add, what Lucina said, that it needs to be part of the overall culture of the company. See, it cannot be the just responsibility of the board, of the management team. It has to become from the whole company, and ideally it has to be culture of the whole company. And this is a responsibility of the board on the one hand, responsibility of the board, but there has to be also all the company do understand that, all the employees, that this is very important. And this is one of the strategic issues for the company. If that work, if it's a culture, part of the culture of the company, I think it will work. Otherwise, it will be a bureaucratic thing, which will be very difficult to implement for the company.
Thank you, Vartong. AJ, I suppose you're also engaging a lot with your supervisory board on these issues.
Oh, of course, and I can explain our strategy map and our governance. And we believe that combating and adapting to climate change is a matter addressed through the active participation of all members, executive committee, and providing the integration and approval of the members of the boards, board of directors. And our organizational structure for sustainability involves the board of directors, executive committee, and employees also. As a result of this process, business plans and activities developed with in the scope of TSKB sustainability strategy, vision, and goals, particularly climate related risks and opportunities are discussed by the Sustainability Committee, where the proposed actions were conveyed by Sustainability Management Committee comprising of CEO, myself, three executive vice presidents, and my colleagues across the bank.
It's a very complete. I can see it's embedded in your culture actually already, as Artang was saying. Now, taking a step back, I'd like to ask you, Ajay, when you look at the market, what do you see as the biggest gaps, the biggest challenges to get all of the banks on the pathway to the Paris alignment? And do you believe the market's waiting for regulatory signals, or do you believe competition is going to get you there? Do you see the winds of change?
Oh, oh yes, and we need more collaboration first, and in between public, as I mentioned, and private bodies, varying from financing to data management also. The holistic and collaborative workout through each organization should be above all individual preferences to refrain from any conflicts of interest. We believe that there is no time left to join forces together in our path. The transparency and accountability will be one of the key matters without curbing out the efforts of the counterparts. Indeed, those efforts will be supported throughout standardization. We believe that the investors in private sector should be well educated, encouraged for the collaboration against the climate change risk, and the cost of not acting today should be well described in order for us to have a livable planet. Nevertheless, the enhancement of internalizing the green regulatory frameworks, climate change-oriented disclosure standards by both financial institutions and companies. We believe that these challenges and gaps will be overcome in the long term. On the other hand, we should also name that there is an increasing competition now across the stakeholders to follow the best practices with the responsibility to account for their actions to ensure responsibility principles.
Do you think competition is actually in the right direction, right? People are competing to
each other.
Implement.
Yeah, okay. Implement and each other. This is a not regular race. It is our target. So competition accelerating to the action.
Artang, do you feel the same? And I'd like you to comment on, you know, in your work expanding internationally, how do you see in your various markets the biggest gaps to that implementation?
Yeah. I think a little bit differently. I think competition is the second issue. I think more cooperation is more important because we are in the developing countries where we are in the initial stage. And I think at the banking sector, we need more cooperation because to increase the cake, because if we split our cake, it's too small. So I think the cooperation will bring bigger stake to everybody. I think probably that will be continued for the long term, for minimum 5 to 10 years. On the other thing, there is a huge type of the gaps and we have a huge number of the challenges, but for the developing countries are the main important, the awareness of among the business and the society about the climate change risks and opportunities. For that, I think the education. So this is the most important thing. Second, I think overall lack of the technical knowledge and expertise for the climate related topics. Third, I think the data. So what we are doing in Georgia and Uzbekistan, it's just our technical work we are doing internally in TBC. It's very difficult to get valuable data from the external resources. And for that, I think we need technical assistance, and probably we need help to be continued from EBRD, from our international partners, and also from the state. And finally, I think also we need affordable funding for green financing, because somehow we have to show to the businesses, especially for the small and medium-sized businesses, just to show to them that how it will be awarded if they will continue to develop the business in that areas.
May I add something? Sorry.
I was going to ask you, because I saw you nodding when Barton was speaking about some of the issues, so please go ahead.
Okay, and another point I want to add is the importance of digitalization. Many of what we have been discussing today is named to be ensured through the capacity development and transformation in digital technologies, varying from data collection and utilization to digital climate investment.
Yes, and you think that that's that trend towards digitalization is going to support the trend towards greening the financial sector. Do you find in Turkey to have the same issues with access to data? Do you find that you have to develop your own assessment as well? Yes.
Yes, of course. And we can examine the data collecting. And for example, for a green economy, we can work on water index.
Mm-hmm.
And we are working on small areas, we are calculating to consumptions and the sources, especially water. And in Istanbul Stock Exchange, you can see our business model to our water index.
Mm-hmm. That's quite a new development, actually, to be able to trade the water index in Istanbul Stock Exchange. Now, Lucina, how do you feel about the challenges, and what are for you the next steps? What's the plan, the next milestones that you have planned in the coming, say, 12 to 18 months on your journey towards Paris alignment?
I think probably the most important task ahead of the bank, and it includes both the management board and us, the supervisory board group, is the new strategy that BNP is putting in place. The strategy will kick in next year. So I would not go ahead of the management board, who will be presenting it probably around Christmas. But one of the key pillars of the strategy is strengthening the bank's position as a leader in sustainable finance, with very ambitious targets when it comes to where the ratio of green assets will be for the bank in a couple of years, and going through various business lines. It also includes how technologically the bank should be prepared, and I also would share the view that managing data, climate related, and the use of this data is quite critical, especially when it comes to retail businesses, small businesses, or consumer finance, or auto loans, etc. So the strategy is also building a new culture, and I would also say that this is quite an important that you build in the ESG and climate sort of focus into the culture of the institution. The second area, which is more immediate, I would say, is the EU taxonomy exercise, which is extremely important, because as we speak, we are trying to collect the information and analyze according to the right methodology what we currently really have in terms of green assets or less green assets, and what should be the journey in the medium term on that. I think this would be the two major pillars. And maybe just one little comment on the technology side, that I fully agree that having access to information, it's ideal to be able to use the technology also to convert it into a client's product and our own management of the risk that we have. So we are actually launching now It has been used already in the US in BNP Paribas. A joint effort with a company, Doconomy, which is a Scandinavian impact tech company, a program called the Green App, where we are offering our retail clients an application to calculate their carbon footprint and water footprint as well through their payment history. It's a brand new development, has been already announced by the bank. We will see how it goes, but I believe that this is exactly the journey that we should be a part of, or a leader maybe on the local market.
Thank you. And I mean, the use of technology to help people measure their carbon footprint is a very exciting development. Now we have about 10 minutes to go. I'm not sure I see many questions coming from the audience, but I'd like to ask you, if you were now speaking to a bank who has not yet started, like to integrate climate risk into their own climate thinking, a bank that says, you know, for us, it's not really that important, and we will simply focus on the on excluding certain sectors. So really at the beginning of that journey, what would you say to them? Who wants to go first? Ece.
Yeah, Paris alignment of financial sector presents a roadmap to make economies sustainable by turning climate and environmental opportunities with structured strategies and policies. And I believe that COP26 will deliver strong results, which will ensure reaching our targets to keep global warming to 1.5 degrees Celsius. And it is our challenges to live with nature and make a peace for nature, to nature, not for nature, to nature. Maybe it's a last chance.
There is a notion of last chance that yes, we feel. I certainly feel that the financial sector can give us that last chance and build it. Partang, what would you say to your region has less of a regulatory push, and a lot of banks that say, I don't really know how to do this. So what would you say to them?
Yeah, I agree with Ece, and not to repeat, and just to use just very shortly, just in 60 seconds, I think it has to be organizational cultural thing first. I think it has to become driven by top down, and it could not be only responsibility of the board or the management team. And if you believe it will become the competitive advantage, and we don't need to wait for the regulatory or reporting requirements. And I think three of us and other institutions, probably we are the corporate citizens of our countries, and to lead the necessary changes in our daily operations. Thank you.
So are you like the Lucina's CEO is presenting his results driving his white Tesla? Do you drive a Tesla, Marta? Lucina, what would you say to these banks that are hesitating and saying, we do ESG, but for us, S is more important than E, therefore we're going to focus on the social impact of the closing of the coal mines instead of the environmental? What would you say to them?
Well, I think primarily it's basically the future of the world economy. So either you want to be a part of it, or you will be excluded on the way, because the CO2 costs, the carbon tax or carbon duties, or all the transition costs related to being not compliant with the right sort of CO2 reduction ambitious, will be a killer, in my opinion, sooner or later for any economy. Of course, you can say that there are huge disparities between more developed world and emerging market and some low-income countries that will not be able to cope with the challenge without the support. But this is exactly a huge business opportunity to be the one who will be able to facilitate that transition and to maybe help the local economy to become more competitive and to win the business case based on that, if we are dealing with people who would be more pragmatic in that context and don't consider the climate matters as priority at the moment. And yes, I would also fully agree with what Vakhtang has said. You need to have certain mindset as an institution, and I agree also that it should be a top sort of example, that you need to have leaders who will be embracing their teams and let's say putting it into the DNA of the institution, because also it will play out at the end of the day because the consumer patterns are changing. I have two teenage kids. They don't eat meat anymore. They buy only in second hand, and they probably will never have car themselves. And these are the future clients of our banks, and we need to have a proposition for them. And if we make the statement and put it into our culture and DNA, we will win them in 5 or 10 years' time.
I see Vakhtang was putting his thumbs up to this. I'm sure your children are pushing you in the same way as all of us who have teenage children or sometimes a little bit older than teenage. You know, that's the hope that I have as well for us as well, because it's not just the regulators, it's not just the nice words of the IFI, it's not just the lofty ambitions of the leaders that are meeting today in Glasgow. It is becoming a grassroots movement that is pushing us. And I'd like to summarize. We're reaching, I think, the end of this panel. It was a fascinating discussion. Thank you very, very much, the three of you, for sharing with us, because we've heard actually a much more positive message from the three of you, leaders in emerging Europe, than our survey was showing, actually. And we've heard that Paris alignment of a financial institution is, of course, a multifaceted task. It means a lot of difficulties, analyzing, managing climate-related risk, analyzing the data, starting to collect the data yourself, because the data is not just available, putting in place the governance mechanism, some difficult decisions to make, some clients you need to say to, well, you know, guys, you need to work differently. So it's not always easy conversations. But I also see you not skirting away your responsibilities. I also see financial institutions here that are starting to align their financial flows with the goals of the Paris Agreement. That will have to become the norm. You've understood it, you see it, and that is, frankly, for me, a very positive message that I take from this panel. That you're working towards the TCFD recommendations. You're working. You're much further down on the journey than most other banks that I've seen. Now, of course, the speed at which banks in our region will move will depend on how quickly supervisors outside of the EU act, and also what tools will be available on the market. But it will depend on the leadership of banks like you. And to some extent, I think the title of the panel, which was moving from ambition to transition plans, I think is out of date. Because if you only have plans, it means you haven't started doing things. Well, you have, and so moving from ambition to transition is, I think, a very, very good piece of news. We see every day the impact of climate change. We saw tragic circumstances in Turkey in the summer in terms of wildfires, but we also saw some floodings and so on. And we all are going to see more and more of it. And so the fact that these large banks that you represent are shifting towards financing low carbon resilient projects and are moving to integrate this dimension in the core of your business model, I think is a very positive message. So again, thank you very, very much for joining this panel around the European Bank for Reconstruction and Development. And thanks for the audience for staying with us. This, by the way, is recorded. So if you've joined us in a way and you want to see the beginning, it will be available on the YouTube channel. Thank you very much, everyone.
Thank
Thank
you.
you.
Thank you.